Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James with the Chart Guys. It's Thursday, March 23rd. Going to do my nightly video on gold. So in yesterday's video, I mentioned that we had 6 green days in a row on gold, and that in the last 2 years, we've only had 2 instances where we've had 6 straight green days without consolidating and pulling back a little bit. And those 2 times we only had 7 green days. So we did have this red candle here of some consolidation pullback, which is still healthy. And you can see on this uptrend, when we have these pullbacks, we back tested the 20 MA and the 80 MA. So for price supports, what you want to look at is the low of today's gold candle is at 1242.70. If we break that, then you look for a back test of the 80 MA, lose that, then we're going to possibly test the 20 MA. What you don't want to see is a TCG bear cross. Again, bear cross when the 40 MA green line crosses under the 80 MA, and then we lose the 20 MA, because you can see the downside we could potentially have if we lose that 20 MA with the TCG bear cross. So that's what you don't want to see on the daily. But for now, it's just healthy consolidation on a pullback. After 6 strong green candles, we wanted some healthy consolidation before we move higher. And if you pull back on the daily a little bit, zoom out. You can see that we're at this daily downtrend line where it's consolidating from. And so again, any consolidation is healthy. We want to eventually take this downtrend line out, and bulls want to take out the high of today of 1253.30, and then obviously this recent high of 1264.90. And on the weekly chart, what that's going to look like is going to take it. Let me remove this thing so you guys can see. Weekly chart, you want to take out this high of 1264.90 and then close above this 50 MA, which is rejected twice on this big dump, and then this bounce attempt where it's rejected on the weekly. So that's where you want to get above. We've held the 20 MA on back test. So on a longer term time scale, if we gain the 50 MA, that's a win for the bulls. If we lose the 20 MA, that's a win for the bears on gold. And on the 4-hour chart, just want to share this with you to look at some price supports and resistances. So on the 4-hour chart here, because of this green candle, big green candle, if we lose a low of today, which again is at 1242.70, we're likely going to lose this 20 MA here. And because of this green candle, there's not much price support until the high of this candle here, which is at 1235.50. So that's the price level we're going to look at if we lose the low of 1242.70 on the 4-hour chart. And I just wanted to show you the 4-hour chart to show you that there isn't much support after this until that price level of 1235.50 with price supports. Now the miners, GDXJ, daily. GDXJ on this pullback. Yesterday I mentioned that gold miners may pull back more than gold because of how weak it's been in comparison to gold, with a big gold bull move, and miners haven't really followed the strength of that gold move. Said that gold miners could be affected more than gold with a pullback. And it obviously was this morning, but we did get some dip buying, and we are still holding the 80 MA daily. We are still holding higher lows. So GDX is stronger than GDXJ technically still, as we're still building higher lows here. We have this low, higher low, and another higher low on the daily. So tomorrow what you want to watch for is the high of this candle, 23.45. We want to break that, and then bulls want to break the high of this candle of 23.56 and close above the 50 MA. you can see these multiple rejections now, 1, 2, 3, 4 in a row on the daily. So clearly, you know that this is the moving average where GDX bulls are really meeting resistance here. And red flag would be to lose a low of today of 22.63, and then the next support would be 22.58. If we lose that, we're likely to test this 20 MA and the low of this candle here of 22.51. If we break 22.51, that's going to be a red flag, as we're setting a lower low on the daily where we've been in a trend of higher lows on the daily. And because of this green flag, just like gold, there's not going to be price support for GDX until we get to this level of this candle, high of this candle, which was previous resistance at 22.19. So that's the price support area we'll look for on GDX if it pulls back further. GDXJ, again, weaker than gold. We did set, we've been setting this high, low, a lower high and a higher low so far today. If this holds as the new higher low, we backtested 20 MA, held. What you want to watch for tomorrow, same setup. You want to break the high of today, 37.44, and then get above the recent high of 38.22. And that changed the trend of setting lower highs by setting a higher high. And then same thing as GDX. We have to close above this 50 MA on the daily chart. Red flag if we break today's low of 35.74, and then big red flag if we lose 35.68. And because of how much it dipped today, there's not much room between 35.74 and 35.68. So that would be a red flag, honestly, to me. I'd be wary if we start the day early and lose the low of today of 35.74 on the miners. Last night I mentioned that if you were looking for short-term consolidation in gold like I was, that you could enter JDST and JDST over dust, because JNUG and GDXJ have been weaker than GDX and NUGT. And so my play was based on a TCG bull cross, this green line crossing over the red line, and then getting above this 20 MA, which he was able to do. And why I wanted that 20 MA along with that TCG bull cross is you can see this 20 MA has rejected multiple times on the back test. Rejections, 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 rejections here. And we've gotten bull crosses, but still rejected from the 20 MA. Bull cross, rejected from the 20 MA. And so it's important for me to get both, and we got that today. So this is set up for a continuation on a swing trade. Red flag would be, if you look at the daily chart for this to continue, a red flag would be for us to break below the low of the day, which at 1332, and then next low support of 1249, and then if we break below 1232, that's here, then bears are gold bear miners are in trouble. And you can see that the daily's been rejecting this 4 EMA, but we were able to gain it today. The JDST bulls were able to gain it today, and now we're testing this 8 EMA. So to continue to play that 4-hour chart swing trade with more conviction on a longer term scale, you are going to have to want to see the break of this high of 1538 and then a close above the 8 EMA here, and eventually getting a TCG bull cross for a test of the 20 EMA. If we do break above the high of here of 1538, because of this big dump, there isn't much resistance until 1651 as far as price resistance goes, the low of this candle. So this is a crucial resistance for the bear miner bulls. So again, watch for a break of today's high, 1523, then high of this recent bounce attempt. And if you look at the hourly on JDST, if you're looking for an earlier exit to protect your profits on that swing trade, you can see once that we got that TCG bull cross on the 4-hour chart and got above the 20 MA on the 4-hour chart, you can clearly see that what held as support is this 80 MA. So you know tomorrow if it loses the 80 MA on the hourly, that would be your the red flag to your signal to exit the play as a swing trade. You can't enter it back in if it, let's say it back tests the 20 MA and then it gets back above these moving averages and we get a TCG bull cross again. Then the play is still good as long as the 4-hour still is holding the TCG bull cross and the 20 MA. And again, that the daily, we want to get above that recent high that we set on the recent bounce attempt. So have a good night, and I'll see you guys tomorrow.